everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our Big Six markets and formulate an attack method and a plan for tomorrow's trading. Tomorrow being the 11th, so 5/11 of 17, and we're going to be looking at, well, hopefully something, right? Today was a little bit slow, a little bit grindy. The only market that really moved, understandably so, was crude oil because of, well, inventories, right? So with the markets in a little bit of a stagnation, they are getting some movement, but the U.S. morning sessions have been really slow. So like we always say, we got to make the plan, follow the plan, but we have to stay on our guard because there's a good chance that this could continue and just keep getting a little bit choppy, sloppy, a little bit messy, so we have to play it a little safe. Now, before we jump into the charts, as always, make sure to swing on over to the website, slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That newsletter is going to sign you up on the email list, and on that email we send out every day, we're going to notify you when this video comes out, and we also talk about different stocks and cryptocurrencies and investment options and statistics and all kinds of fun stuff. So a great newsletter to get your hands on, and of course, don't forget to check out the bottom of the page. These are all of the blog posts that we make. We generally make 2 a day. One is going to be the morning prep levels, and those are going to be all the major levels of support and resistance every single day for the big 6 markets that we trade. And then in the afternoon session, we go over a market psychology or a trade example video where we rip apart a trade or a market as a whole and try to figure out as much about it as possible. Now, if you haven't done so already, make sure to click on the live trade room subscription and trial info and sign up for a 1-day trial. See what we're all about. That will allow you to kind of see what we're doing every day and how we make the markets kind of bend to our will, or maybe we bend to their will some days, I guess, but overall, that will allow you to see what we're doing. Now, if you really enjoy it, you can always jump in for a weekly or monthly subscription, and of course, if you join as a VIP member, you get the live trade room as part of the package, so you don't have to worry about ever spending anything ever again. Now, looking at the Bund had a lot of movement today, but we really didn't accomplish much. And we sound like a broken record when we say that because, well, the last couple days have been very reminiscent of this. We get a lot of movement, we get one big, nice spike, and then it gives it all back by the end of the day. And by the end of the day, we're looking at a day on the candle side of things that looks like this, right? This is the daily candle. This is where we opened and closed. We have a big wick, and we have a small wick on the bottom. So it gave everything up here back. And that leads into a relatively bearish daily candle. A lot of traders are going to look at that thinking, oh man, look at that daily candle, right? We better be thinking sell tomorrow, which means that likely a lot of sellers will begin jumping in underneath this daily low. So around that 160.22 area is where you really start anticipating the sellers to start taking over. Now, I have an area of support marked up at 160.27 to 25, and that's kind of the last line of defense. If the buyers are going to hold it, they need to do it here. If they let this level go, it's game over, right? That's where we're looking for the low of the day, we're looking for a breakdown, and we're looking to finish off the objective to the downside at 160.14, and that may be relatively conservative given the strength of the daily bear candle that we're setting up. So keep that in mind. Overall, if we break through that level at 160.25 to 27, then we're looking for game on to the downside to sell, finish off the objective, and possibly even longer to the downside for the next several days for possible bearishness. Looking at the euro was mostly range bound for the most part, really didn't get a whole lot done here as well. It's another day where we opened up here, they had a beautiful move to the upside, it gave it all back, cracked lower, and by the time they ended up towards the end of the day, we ended up closing around here. So we gave most of this day back as well. This is the daily candle. So a lot of wick on the top, but the problem with this one is there's a lot of wick on the bottom too. It's mostly just a big old doji. So with a slight bearish emphasis, obviously we are looking to sell more than buy, and we are at the top of a wedge. And this is the exact location where we really want to start thinking, okay, well maybe we want to begin selling in this location to try to get another push down. There are a couple issues though. One thing that we don't talk about a lot, but it is something that can be very important when the context is right, is pressure, right? When you have a lot of pressure, you have a lot of back-to-back bull candles, and when the opposing side, the bears in this case, try coming in, they barely get anything, right? Bad pun, sorry. They barely get anything. You have a strong bull rally to the upside, bears try coming in, ends up being a trap and pushes higher. Strong bull rally to the upside, bears try coming in, they don't get anything done, it pushes back up again. Now we are starting to see them stall a little bit, and we could be forming a small little range. And generally when you have this amount of pressure, what we need to see if we are going to sell is a breakdown to show that the sellers are coming back. Then let them correct and sell off of that point instead. So right now we're kind of in a holding pattern. The buyers are showing just a ton of bullish pressure. We don't want to step in the way of the buyers right now. And even though they are relatively early to the party, they haven't really proven a bull trend. We have enough pressure here that could potentially kick one off. So before I look to sell, I'm waiting for the breakdown first and then sell the retrace to drive it back down towards the lows. Nice area possible resistance if the bulls do continue up at around that 89.65, all the way up back to that big 9,000 level. 9,005 and 9,085 could be some big areas of interest if they catch that correction up. Overall, still looking to sell though. Over on gold, well, we really didn't do a whole lot outside of that big spike that happened yesterday while we were recording. We had that big slam higher, and we couldn't even get outside of that candle's high before they tried getting back through the lows. That failed there, failed. They couldn't even make it up to the highs, came back down to the lows, failed, tried breaking out, initially failed, and then finally they let it go. Right, so with that massive amount of bullish pressure kind of out of the way, now we're looking at the sellers taking over and getting that breakdown. Now, this is where we really want to kind of go into the bigger picture. We have a much larger bearish trend on our hands where it just keeps going down and down and down and down. Now, we originally did have this nice little range inside here. They broke down, and a lot of times ranges you anticipate to be a failure. You don't expect ranges to really stick around and break out and continue. You expect them to break out, come back in, and fail that breakout. In this case, though, we had the breakout, they came back, and they held it, and now we're starting to turn back down again. So if we are going to continue the downside, really what we want to see is the last line of defense for the buyers to get out of the way. Now, the last line of defense is going to be back here, right around this level at 12.18 to 19, this zone inside of here. We need this to go away. If the buyers can hold this area, then there's a good chance that we do end up failing this breakdown and go back up into the range. If we start breaking down and we can dig into the 16s, into the 17s, and start showing that the sellers do own this market more than they already do, then there's a very good chance that we run down to that prior low of day at 14.3. Now, the overall downside breakout, it's obvious that the sellers own the market. I'm looking for a sell, and I'd prefer to sell at a better price. Given the range low that we had here, strong at 21, I really don't want to mess around with that 21 level. I would rather let them break down, come back, give me an area retest to sell, and then drive the market back down from there. So looking to sell, but looking to sell at around 21 up to 21.9 before we start looking for that breakdown. Over on the bonds, still the bonds mostly worthless. Not necessarily worthless, I suppose. Maybe that's a little bit of a harsh term, but they're not really doing a whole lot. The bonds have been very choppy the last couple days, really messy, and for the most part, even in the room, we've been talking about how we're just not paying attention to it. It seems to be mostly a waste of time, except a select couple candles out of the day that would have given you some nice trades, and I really don't like waiting around for one good candle on the day to take a trade. I would rather wait for some better opportunities. So it is an alternative for the bonds, but again, for me personally and a lot of folks in our room, we're not really even paying attention to it. Now, one thing to keep an eye on for the bonds, we are breaking down, and again, invoking the larger trend to the downside. The buyers tried getting the move up, they got that rally, and guess what? We broke out. They came back to the area of resistance, drove back down to the lows. They tried getting a breakout to the upside, and that failed, and so it makes a lot of sense to see this breakdown get some continuation. We have a finalized objective at the lows at 150.09, just underneath price. We tried breaking out below the prior low of day today towards the afternoon session, going into more recently where we're getting a little bit of a rebound. But that downside objective is still open, and as long as that remains open, we're looking for at least back to 150.12 or so, but preferably down to 09, maybe even a little bit further. So in the bigger picture, we have a strong bear trend. We're looking to sell. We want to sell at better prices. So 150.25 is the first more aggressive area for possible selling pressure. Then we're looking back at a retest of some of the prior areas of support that broke down. Nice double bottom support, triple bottom if you can include this little bounce right here, which broke down. And if we come back to that area right around 150.30, looking for that as an area of rejection. A little bit higher at 151.03, 02, and then again 151.07 or so. Now, preferably the lower the better, because that shows the aggression, and we do still have the downside objective. But just, play it a little bit safe on the bonds. They're not acting very nice lately with all of that back and forth, so make sure to stick to your plan to a T when you're looking at the bonds. Now, crude oil, obviously, crude oil inventories had a pretty big impact. They were forecasting a negative number. The API was forecasting a much larger negative number. Once again, the API was much more accurate. And, well, for the most part, the market tended to kind of go with the fundamentals, which saying that's kind of weird because a lot of times the market doesn't do that. Now, a lot of times the market has that price built in. If they're forecasting a bullish number, you'll likely see the overnight session be bullish where they've already priced in the news. So when the news comes out, you get a bear spike, and everyone's like, well, what happened, right? This is supposed to go up. Well, they've already been buying. They've been buying for the last 6 hours. They're taking profit on the news so they can buy more. In this case, both of the numbers lined up. The API forecasted a negative 5.7 or 8. The forecast for today's inventory was at a negative 1.7. They both generally agreed, but there was a big distance between the two. So which one do you go with, right? You can cut them in half and say, okay, well, maybe we're just going to assume that it's like a negative 2. Other traders will say, I don't know, so I'm not going to be as aggressive. And so they weren't. We had a really grindy overnight bull trend up. It came out much more negative than the forecast for today, came out in line with the API, and then everyone realized what they needed to do, and it ripped back up to the upside. And we do still have an upside objective at 47.83, looking for buying pressure at 47.21 down to 10. And if they really want to pull back, we have 89 and 39 back down to get some more buying pressure. Now, one level to keep an eye on is the low of that news candle. A lot of times when the market returns to those news candle lows, if it's a bull candle, or highs if it's a bear candle, they can be a big area of interest. So 46.63 is another possible area of interest. We have a 3-push wedge top with a stagnating third push, meaning that it's weakening, so you're expecting a deeper pullback. So the area between 21 and 10 might be a little bit too high. You might rather wait for a breakdown underneath that level, maybe a head fake, maybe a dip down into that 89, and then the pop higher to finish that objective off. Either way, though, looking for a finishing move off to 47.83, just a matter of where the buyers want to come in. And then finally, the S&P, taking notes from the bonds apparently today. Very slow, very grindy, not a whole lot going on for the S&P with a slight bullish bias on the day. For the most part, though, we have traveling ranges, right? We have a range here, traveled up, made a new one, traveled up, made a new one. We're just kind of bouncing around. So this is where, once again, we want to invoke the larger trend. The larger trend generally is up. We've been range bound for a little over a month now, so arguably there isn't really much of a trend, but in the short term, we have a slight bull trend in our hands towards the bottom of the range, bouncing off, so we're looking for more buying pressure to continue. Now, once we start digging into the highs, and the highs can, right around that 2400 mark seems to be where the sellers start digging in, that's where we're looking to really start, kind of switching gears a little bit. Do they want to break out, or are they going to fail, as most of the range breakouts have so far? That's what we have to wait for. Now, given that this is so range-bound, so back and forth, and just really choppy, I would rather wait to see a better pullback. I don't want to buy way up here looking at, oh yeah, well, it's getting more aggressive, I need to buy now and let it go. At this point in time, in my opinion, you're buying high, hoping it goes higher, and that's not a scenario that I really want to find myself in. So right now, I would rather look to buy it around 94 or lower, especially around 92, or even better, 89.5, to then pop that market right back up towards the highs. Now, you will notice we have an unfinished objective up here at 97 3/4. We're not too far away from it. We'll probably finish it in the overnight session, but in case we don't, I would love to see a pullback to bounce that up and finish that off. So overall, looking to buy, but I do not want to buy right now. I want to buy in a little bit of a pullback. So that's going to do it for the outlook. Looking at the news, there is at least something going on tomorrow. But there's a little bit of a kink. There's not much, right? Most of the news is coming out for other countries. So for the UK, at 4:30 Eastern, we have the manufacturing production, which is forecasted at negative 0.2%. At 7 o'clock for the UK, we have the Bank of England inflation report and the interest rate decision, and the MPC meeting minutes. So there are a lot of big announcements coming out tomorrow for the UK. Is that going to have much of an impact on the U.S.? It may not, depending on what assets they're going to be talking about and how much of an impact they have on the U.S. as a whole, but probably not much. Now, one thing that it may have an impact on is gold, because gold generally backs a lot of currencies, and that would be sort of kind of, the fallback that a lot of people always tend to look at when big news hits. Now, for the U.S. session, the only thing that we have is at 8:30 Eastern, that's going to be the PPI, forecasted at a positive 0.2%. The previous was a negative 0.1%. And that's all we have on the calendar for tomorrow. So another expected, possibly slow day. Given that today was so slow, the day prior was so slow, we may end up just getting some movement because people are bored and they want something to happen and they start throwing on some of the more gambly trades. But a lot of times when that happens, you get some movement. And they may use 8:30 as that catalyst to do it. So just play it safe tomorrow, anticipating a slower day though. So yeah, you might want to take your trade and get out and enjoy the weather if it's nice by you. Otherwise though, like we always say, make the plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.